please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, what a reversal we've had over the last, 16 hours or so. US markets, before, as we were wrapping up trade here and as US markets were opening trade later in the evening, it was looking like it's going to be bloodbath. The S&P futures were down about 2%, full 2%. VIX was shooting higher, gold was up, US yields were falling. It's all reversed. By close, I mean, by the time you actually woke up, I mean, actually even by about 11:30 our time at night, Dow was actually higher by a little bit. And by close, we are up. We are up between 1 and 1.5% on the Dow, the Nasdaq, and the S&P 500. And all other asset classes also look stable. It's showing up on the Nifty with about 130, 135 odd point gain. So it's a pretty spectacular last, 16 hours or so. From the high point, the Nifty is down about 25 points. We were up more, but 140 points on any given day, especially the kind of last few days we've had, is nothing to be scoffed at. 10,267 on the Nifty. With me is my colleague Ekta. Ekta, morning.
Hi Prashant, absolutely. Well, we are back at the high point of yesterday's trading session. So that's definitely a positive. And we have a very, very strong advance decline ratio on our hands, which is currently standing at a really steady 8:1 or 9:1 on the National Stock Exchange. So you can see the kind of breadth that we have for the market. Very steady, very strong at this point. And a lot of stocks in focus. ICICI Bank, which is seeing a little bit of a comeback. Hindalco, Vedanta from the entire metal space, which is seeing some amount of buying, and Apollo Tyres along with MRF. All of these tire stocks have been sitting at fresh 52-week highs and seem to be just about building in terms of their gains. So a lot of stocks to discuss over the next 1 hour. But let's get talking to Sudarshan Sukhani, who joins in on the technicals of the market now. Sudarshan, hi, morning, over to you. What would you recommend to your clients on the Nifty as well as in terms of specific stocks?
Yeah, good morning again. The suggestion has been consistent for many days that we should be long in the market using Nifty call options. The options are used to avoid the volatility that we are seeing. I also think that yesterday was perhaps a low that was made, the bears' last stand, so as to say. Markets have been resilient, the supports have held on, so chances are that from now on we'll see a much smoother up move. The suggestion then has been and still is buy Nifty call options and stay long. Look for a target of 10,450 to 10,500.
Stock, Sudarshan, morning, what would you do?
Yeah, good morning. Well, we are really looking at buying mid caps. Shriram Transport Finance is a buying opportunity, part of the NBFC group, which has just begun doing well and has been an outperformer. Similarly, Tata Global Beverages went through a deep correction after that stupendous rally. That correction is over. Higher levels should be coming. May not double itself, but significantly decent rally should be in the offing for Tata Global. That's a buy. And finally, Raymond is a buy after a long time. The stock seems to be building a trading range and is willing to go and break out on the upside. So 3 mid-cap ideas, all for buying.
Okay, let's get some questions answered, Sudarshan, and we've got a few coming your way actually. Saurav has 100 shares of NBCC. He's paid 211 rupees each for them. Wants to know what he should be doing. NBCC. Oh,
he should be holding on to them. Please hold on. NBCC is in a strong up move. We are seeing corrections. You know, every stock, every market corrects. So just forget about the declines that you have seen. Higher levels should be coming here. Hold on to NBCC.
Okay, and we have one more, Sudarshan, for you. Dhananjay has 6,000 shares of Madison Sumi, which is bought at 345. Wants to know the long-term view on the stock and whether or not he should hold or sell. Any which way, this stock has seen some amount of momentum, especially post that acquisition that they made earlier this week. So what would you recommend?
Oh, I would recommend you hold on because the worst is over for the stock. It's seen a very significant correction. That correction is complete. Now that it's actually a time to go and buy the share. Of course, he already owns it, so let him stay with it. Hold on. 1 year later, you may see 400 plus.
Okay, thanks very much, Sudarshan. We speak with you soon again. We've got CA Rudramurthy also with us on the show with some F&O trades. Rudramurthy, good morning. What would you be trading?
See, first of all, a word on market. I am very, very bullish at current levels, both on Nifty as well as Bank Nifty. Let me give the technical perspective. Yesterday, we have seen that gap down move, but that was definitely a fundamental news trigger. And then today, market is easily bouncing. On market profile, I am seeing clear-cut buying. On order flow, positivity is seen. This is definitely a market to buy. And I won't be surprised even if we hit all-time highs in May 2nd week or end of May, expecting even positive results to come from Karnataka elections to BJP. But keeping all these factors aside, at least one should not definitely short markets at current level, if not to buy. But I am very bullish on market with a clear stop loss. For me, Nifty is a positional buy. Keep a stop loss of 10,240 on Nifty future and buy this market for a target of 10,480. From current levels, I have a clear 280-300 points target and hardly 50-60 points stop loss. It's a very good risk reward to go long on Nifty future, but a stop loss at 10,240 on a closing basis is a must. When it comes to Bank Nifty again, I am looking at targets of 24,950 on Bank Nifty future positionally in this market and have a stop loss of 24,400 for this long call. When it comes to stock specific call, DLF is my first buy. See, this stock valuation wise is so attractive. This will be the only real estate stock at such a huge market capitalization. You will be getting stock at these throwaway prices. For me, 300 rupees at least a good target for DLF for 6 months to 1 year. And at current levels, one can take exposure in futures and trade long. 198 is a very strong support, and promoters have bought stake in DLF for 218, 220. You are getting below their price. So DLF is a clear buy for me. Don't buy for 2-3 rupee intraday move. Have a positional view of at least 240 on futures for current month. Have a stop loss of 198 on DLF. Second buy for me is NCC. This stock is again giving clear signs of up move for me. Have a target of 140 on NCC with a stop loss of 128, and I have a last buy call on Dish TV. Last 2-3 days, lot of accumulation is seen on the positive side. Delivery based volume is happening. Consolidation, valuation wise fundamentally looks strong. So look at target of 76 initially on Dish TV with a stop loss of 70, and this is not a time to short this market. Clearly buy with the appropriate stop losses and the risk reward favoring you.
Okay, all right, Rudamurthy, we're going to let you go on that note. Thanks very much for joining in and taking us through all of your strategies. Well, the big cue for today will be the RBI Governor Urjit Patel announcing the first Monetary Policy Committee decision for this fiscal, for FY19. A CNBC TV18 poll shows all key market participants are expecting a status quo on the repo rate. That means no change on the repo this time. But here's what CNBC TV18 Citizen Monetary Policy Committee members Pranab Sen and Sonal Verma are expecting this time round from the Reserve Bank of India.
The upside risk to inflation is concerned, which is in terms of the MSP. Again, I wouldn't worry too much about it. The fact of the matter is that the MSP is only as good as the government's ability to support that price. And the fact is that the institution's infrastructure is simply not there. You can announce any price you want, but the market is going to be doing exactly what it thinks it should be doing. It won't care about the MSP very much. So I don't think that is an immediate risk. It will become a risk if the government's procurement infrastructure or the deficit payment arrangements become stronger. Then the ball game changes, but that's not happening in the next season. I would probably be a little cautious, because as far as growth is concerned, you really don't have to be ahead of the curve.
We're sort of in the wait and watch zone, I guess, right now. Clearly, there are risks to inflation, like I said, because of MSP and oil. At the same time, the government is also trying to ensure that the MSP actually becomes an effective floor through some form of fiscal transfers to be made to farmers. So, like I said, I think government policies around food inflation are changing, because there are, their politics clearly, and there's a lot at stake because of the election cycle. So I think we have to be cognizant of the upside risk that poses both to the inflation and the fiscal outlook.
Well, we have a lot of the metal stocks which are bouncing back today, so that's definitely a positive which is coming through. We have Hindalco, which is now up around 5.5%. We have Vedanta, which is up around 4.2% at this point, and a couple of other stocks such as Tata Steel are also showing some amount of momentum, up 3% today. But still, if you look at these stocks on a year-to-date basis, there's a lot you can ask for. For example, Tata Steel has lost around 17% on a year-to-date basis. But let's focus on one stock now. News reports suggest that Brigade plans to spend up to 10,000 crores over 3 years to double their project launches across verticals, including residential, commercial, as well as hospitality. Vishal Mirchandani, CEO Retail and Commercial at the company, joins in to discuss this and more. Vishal, hi, thanks very much for joining in. I know this is a 3-year timeline that you've given in terms of this 10,000 crore capex, but if you could just talk about the near-term projects that you have lined up, both commercial as well as residential.
Good morning, everybody. Thanks for having me over. Actually, in real estate, if you look at timelines, 3 years is a pretty short-term timeline to look at. Below that, it would be a very immediate plan. Having said that, I think one must realize that construction period is typically about 3 to 4 years. When we say that we're going to double our construction or development plan, that I think is a bigger picture that we are looking at right now. Right now, we have about 40 million square feet under various stages of development. So, and which will be delivered within 3 to 5 years. When we look at various verticals, we're seeing healthy growth across the platform. Whereas in residential, which has seen a bit of a struggle over the last couple of years, over there also we are beginning to see green shoots emerging. So I think going forward, we see a pretty a reasonably good picture evolving to support our development plans.
Right. No, so when you're saying you're doubling your construction business, Vishal.
That's right.
Morning.
Morning.
Yeah. So you're right now there's about 40,000 square feet under development. You said. What
40 million.
40 million. Sorry. And this is doubling, is what you're saying, over a period of time.
No, this will be the double.
This is the double. Okay.
Yes.
Okay. But this is already under development, right? You're already working on all these projects.
Exactly. So what we are saying is that we are moving from 20 to 40 million square feet, and
Okay.
this entails a large level of investment. That is what we are planning to do. So this is across verticals.
Which of the verticals is is got the most healthy momentum right now? We hear a fair bit about office spaces and that market being extremely strong. Is that correct?
Absolutely. So we are actually we are emerging as one of the larger strategic players in the commercial real estate market in the country. We have already got about 9 million square feet of operating commercial real estate, and we are developing another 14 million square feet to be delivered within the next 3 to 4 years' time. By which time, we'll have around 22, 23 million square feet of operating office space real estate, which is a fairly large portfolio by any standards in our country. This is actually supported by a mix of development plans that we have. We're developing tech parks, and as you may be knowing, Brigade Group holds the licenses for World Trade Centers in 5 cities, which is Bangalore, Hyderabad, Chennai, Trivandrum, and Kochi. Out of which, World Trade Center in Bangalore is already operational. It's a 1.1 million square feet iconic development where we are also headquartered. And it's one of the landmarks as far as the city of Bangalore is concerned. World Trade Center Kochi Phase 1 is also operational, and to back all this, we have World Trade Center Chennai coming up is under construction. It's a 2 million square feet development, and that's a joint venture with GIC, and that's again going to be an iconic development, not just for the city of Chennai, but for the entire country. It's going to be a tall tower. There are two towers, what we call twin towers. World Trade Center Twin Towers in Chennai.
So what is the kind of leasing that you're expecting or rates that you're expecting from these World Trade Centers?
So World Trade Centers are basically are going to be located in 5 different cities and different micro markets. So obviously the kind of development, first of all, the development ethos that the Brigade Group has is a very high level, very high quality sort of standard that we follow. Okay. And when we develop a World Trade Center, we actually raise the bar even more than what we normally do. Therefore, with World Trade Center in Chennai, which is, like I mentioned, Twin Tower project, it's going to be an iconic project.
Sure, but what is the kind of yield you're expecting?
So we would be certainly in the high teens as far as the yields are concerned.
Okay. I just want to touch upon your hospitality business as well, because we do understand that you are looking to probably pair off some stake in your hospitality business. Give us an update in terms of where the projects are and whether this deal is probably going to close by second half of FY19, a guidance provided earlier.
So today we have about 5 hotels operating under 5 major brands. Okay, and we are actually looking at taking this, what we call the hotel room strength or the volume to 2,000 rooms by 2020. And we have, of course, as you know, we hived off that business into a separate entity so as to enable us to attract private equity investment and, actually fuel the business even more to take it up to 4,000 keys. And so that's our plan. And it, the growth to 4,000 keys will be largely dependent on how and when we get we are able to attract the private equity investor, which, as you mentioned, we've already sort of estimated. So we should be able to do that within the timelines that you have mentioned.
Vishal, could you provide us with some guidance, say by say over the next 2 years, 3 years, maybe even by 2020? What would top line, etc., look like? I mean, will we see a transformed, much larger Brigade?
Certainly, you're going to see a much larger, very well transformed Brigade, very well balanced Brigade. Just not looking at a larger number, but also, well spread number between residential business, office space business, retail business, hospitality business. So you'll see a good balance striking up between the 4 business verticals. And of course, when we say that we are going to double our, development area, obviously it is going to result in, a revenue, a much higher revenue, backed by the 10,000 up to 10,000 crore investment plan that we have laid out. Having said that, I think there is a degree of unpredictability in the market, especially in the residential side, where we feel the green shoots are emerging right now, but up to what extent and what speed we'll be able to see the total recovery is yet to be seen. So it is difficult to give you a full, a pinpointed number, an accurate number of estimate. But of course, as far as office space is concerned, I can share with you that today our, our rentals, lease rentals in that business are in the region of about 250 to 75 crores. And we expect that in about 4 years' time to increase to about 1,000 crores.
Quick one-word answer, Vishal, before we let you go. You're not stopping any of your projects or stalling on in terms of the construction of any of the residential projects as of now. You're not. You're continuing it, continuing with it despite the kind of sluggishness in demand.
Certainly, no. We are looking at expanding our business, and we are looking at smartly expanding our business. So, trying to right size our apartments where prices are in the the sweet spot, what we call of 40, 50 lakhs to about 70, 75 lakhs per apartment. So I think there the demand is very strong, or is emerging to be a strong demand, and we'll continue to put our focus there, along with affordable housing, where we are developing about 10 million square feet.
Vishal, you said office rental revenues 1,000 crores in the next 4 years from 250 odd right now. 275
about total, not office rentals, lease rentals.
Okay.
That is combined retail and office. That's right.
Sure. Vishal, thanks.
Around 900 to 1,000 crores.
The next 4 years.
Yes.
Fair enough.
After 4 years.
Which is starting 19.
No, after 4 years, no.
Yeah, I mean same. 19, 20, 20 by FY 22.
21, 20.
Yeah.
22, that's right.
You've got the market, which is up 132 points, so still about 25, 30 points off the highs, but it's a big sort of up move that we are seeing after such a troubled last couple of days. I mean, up and down over and over again. Manisha is here to take us through what's happening with the world of commodities. But just a quick word, I think on Varun Beverages, I saw a flash saying they're going to set up a new plant in Punjab. So that was just that one line which I saw. Maybe we should just look at the stock before we move on to commodities. Stocks up about 1 1/3%. We'll try, actually we should try and get in touch with the management at Varun Beverages with regards to that flash which came about. Manisha is here. Manisha, morning.
Thank you so much for that, Prashant. Well, while we have seen the trade fears ease as there are statements from both sides that there is negotiations happening between China and US, and that's taken the global equity markets on the higher side, given some strength to the US dollar. And many of those industrial commodities also seem to be taking some strength. So you have the crude oil prices trading 0.5% on the higher side because of all of those macro events. And if you look at the individual fundamentals as well, you have seen a larger than expected drop in the US weekly inventory by 4.7 million barrels. The OPEC data shows that the output in the month of March has been at 11-month lows, and that, of course, has been supportive there.
But let's get back to the commodity and currency market, Manisha. Over
well, you
to
have more interesting news clearly to cover, but crude oil prices also demand some attention, where we have seen some strength come on. Navneet Damani of Motilal Oswal now joins us. Navneet, what is your sense? Where do you see the crude oil prices headed? One, of course, is the trade conflict, which seems to be making the markets jittery. But on the other side, the individual fundamentals itself have been slightly supportive.
Well, crude oil prices were pricing in a lot of positive fundamentals, and that's the reason they went up from $59 to about $66, $67 for the WTI. But most of it could, I believe, was already priced into the prices. We've seen that inventories over the last 4 or 5 weeks have been very disappointing and have been very much away from in line with the expectations. So yesterday also there was an expectation of a build-up, and we saw a massive drawdown, and that's what we've seen over the last 3 or 4 weeks. So it's really getting very difficult to trade crude oil or probably predict crude oil prices at the moment. But I sense that 64, 65 should be a very short-term cap, and I do not see prices inching above those. So we would like to sell around those levels, and we are expecting prices to cool off towards $61, $62.
Also, Navneet, how are you looking at the industrial metal space? Because on one side, again, it is about the China-US spat, which really seems to be keeping steel and aluminum for one jittery. We have seen the steel imports in US up by 32% month-on-month basis for the month of March, and this perhaps is what the markets did or the traders did before the import tariffs actually would kick in. But how are you looking at the trade right now? Is there a buy coming in anywhere into this sector?
Well, a couple of days back, it was looking like the metals sector has rebounded and probably headed northwards. But yesterday, we saw a brief sell-off coming in because of the trade war escalating. But I sense now that amicable situation is kind of coming in, and we are seeing cool-off in precious metals. So our bet is that copper would continue to be the best bet along with nickel, and one can buy around 334, 335 levels with targets towards 339 with stops below 330 levels.
All right, Navneet, we'll let you go at that. So it's a range-bound trend in the crude oil prices, but some buying perhaps coming in for the industrial metals.
Okay, all right. Manisha, we're going to leave you on that note. Thanks very much for joining in. We have Ashwini joining in to talk about the technicals of the market. The Nifty is holding steady at 10,260. We have a good advanced decline ratio on our hands, and we have only 4 stocks which are declining within the Nifty space. We have Ashwini with us. Ashwini, over to you then. We're holding at 10,260, not building beyond those gains. What would that tell you, and what are your recommendations as well?
See, once you have a large rally at the open, the market tends to go sideways, but still all sectors in the positive, all banks are positive. So this is a dip you should try to buy. I think as the market completes this consolidation, we should head higher towards the close. So that way, I think the idea should be to buy into this sort of 20-30 point decline. As far as individual stocks are concerned, Sundaram Fastener is a buy with a stop of 578, target of 600. Bajaj Finance is a buy with a stop of 1890, target of 1950. And VIP Industries is a buy with a stop of 324, target of 342. My sense is that whatever happens in the policy, the banks are likely to head higher. So that way, I don't think people should take the policy very seriously unless there is some great disruption that is announced, which seems unlikely. A lukewarm, neutral policy would take the banks higher.
So in a couple of, you're positive for the market in the next couple of days. I mean, you think we could move up meaningfully 4-5% from here, Ashwini?
That's always difficult to say, given that we are so bound by news flow. But if we are able to maintain this, 10,300, which is yesterday's high, then, we start building up even further. But it will be basically sideways to up. I don't think you are going to have, those big run-ups, because they happen only once there are short positions in the system. But what's clearly the problem is that 10,300, 350, this zone has, stumped the market several times. So we now need to get past this to get, more short covering.
Okay, all right. We have some Twitter queries now. Ashwini, first up is Karthik. 1,000 shares of Jain Irrigation at 105. Wants to know if he should hold or sell the stock.
For many years, I've been hearing that irrigation and it's always needed, etc., etc. But nothing ever comes out of the stock. If I were him, I would probably get into an Ashok Leyland, which is kind of similar price range, but a stock where, several pieces of good news are often announced. Since he's making a bit of money, I think shifting would be a good idea.